trying to keep Frank on his own side of the table. He always encroaches on me. Hey, by the way, the best comment could win one of these. We've got 4 of them.
Genuine road cone.
Right. Stolen from Caltrans.
Signed by us.
Hey, Movement Mortgage wants you to know 671. Frank, tell them what it is.
Okay, so 6 hours in underwriting, 7 days in processing, and a 1-day funding. They do it all the time, day in, day out. If you're a loan officer, if you're thinking about making a move, if you're happy, just stay where you are. But if you're thinking about making a move, you got to check out Movement Mortgage. Click Movement Mortgage. Click the banner you see right here over on your right, or Facebook. There's a link up above.
You know, somebody just sent a message that said, Brian, I really like you, but why does it always look like you just woke up? I didn't just wake up. I just want to let you know. I just haven't washed my hair in a week. That's what you get. All right, so
what I deal with every day.
So the National Mortgage News, they just put out an article. Stay on your side of the table. They just put out an article that's titled, Lenders Warming Up to Reverse Mortgage Purchases.
Aha!
Now, my response to this is, why not? I mean, seriously, not only why not, but I believe, think about this, Frank, that you loan officers have a professional obligation to let seniors know a HECM purchase is an option if in fact that is the case.
Yeah.
All right, think here.
Yeah.
If you're not at minimum offering it, you're being professionally irresponsible.
Ooh.
Now, why can I say this? Well, my income anemic father-in-law just put 25% down on a purchase. He's 85 years old. His new home comes with a payment, HOAs, the rental of a storage unit, and all the other goodies that milk him of his limited reserves. And this is all I can say. I love this guy. I really do. I love him. He's one of the best men I've ever met in my life. But he better die in the next 5 years because his money is going to be gone and he won't be able to afford the nut on his house right now. Period. No ifs, ands, or buts. Now, I chose for a variety of reasons to stay out of his personal business. I did tell him that a HECM purchase would have been a better option for him, but his lender knowingly put him in a home that's going to crash him financially in about 5 years. Now, question here. Why did my father-in-law put 25% down? Answer, because 20% down with his 800 credit scores wouldn't approve. Why? His ratios. And the loan officer didn't say, wait, Frank, his name is Frank as well, maybe you ought to look at a HECM purchase.
If he did, Brian's father-in-law wouldn't be running a negative every single month.
Right.
In fact, he most likely would be able to put money away. And he'd also be able to deal with medical bills that are on the way and will increase as he gets older and not go away. So he would have had more security, which means a better, standard of living.
Totally.
And, HECMs are easy to do and they pay big. Seriously, as a loan officer, if you have a senior who's buying a home and his mortgage is going to exceed his or her, possible lifespan, you might want to consider offering them a HECM purchase. Just a friendly reminder. Oh, and by the way, we're going to have a webinar with Liberty Home Equity Solutions on reverse mortgages. Their banner is right here over on your right. It's coming up on the 22nd. You might want to register for that.
I mean, if you have somebody who's 70 years old, are you going to live to 100? I mean, you might live to 99, but even if that's the case, would they still be better off with a HECM? Just look into these things, guys. They're totally underutilized, and they're a great loan. One of the greatest loans in the country, as Donald Trump would say. Now, the bill to replace Dodd-Frank is getting close, and its detractors, they're getting loud and irrational. By the way, how can you name a finance reform bill, Dodd-Frank, after a guy who knowingly took an illegal mortgage from Countrywide? Isn't that alone reason to replace this damn thing?
Well, Elizabeth Warren says one provision of the bill changes one word. The Fed shall tailor the rules instead of may. Aha. With that one word change, she said, banks can sue the Fed if they don't weaken the rules the way that they want.
Oh, really? Really? Banks suing the Fed. All right, what bank is going to poke that bear? Really? The statement is delusional and lets me know somebody isn't listening, Mrs. Warren. Banks are just happy not being sued. If they sued the Fed and God forbid they won, they'd have holy hell rain down on them from a half a dozen other agencies. Carry on, Frank.
Under the bill, the Federal Reserve would be required to ease its capital and liquidity requirements for regional banks with $50 billion to $250 billion in assets.
Absolutely, they're going to do that. You see, guys, when you ease capital requirements, it allows lender to lend more money. When banks do that, we all get cheaper money and our economy grows, which, by the way, disproportionately helps underserved people. Frank?
Community banks. Warren says if we were just talking about community banks, we'd be having a different conversation.
That's because even Barney Frank said Dodd-Frank is too hard on community banks. Yeah, he really said that. And the bill is not just about community banks. So am I to assume that Warren believes community banks are acceptable collateral damage and are marched towards punishing financial institutions even more? And oh, by the way, even if we loosen up Dodd-Frank, I mean, look around. Are we really at a shortage for ways to sue big banks? No.
The truth is, if you like a robust economy and a better housing market that's available to more families at reasonable prices, you need to contact your senators,
Yes.
man, and tell them to support their bill. What is it? SB, Senate bill?
Senate bill?
2155.
Yes.
SB 2155. So do that.
Yeah, this thing has to go through. I mean, we're going to be looking at a pretty rough 2018 as it is. This is going to be good for housing, good for the economy, good for your borrowers, and it's also going to be good for banks. But unfortunately, there are people in Congress right now who are hell-bent and punishing banks is more important than helping the economy and borrowers.
You know what? We have a lack of inventory, but you know what might help some of you real estate people get some new listings?
What's that?
Well, we have this product called Keyboom. You should check it out. And if you get Keyboom, you're able to go out to a potential seller and say, hey, you know, list with me and I'll get your property on TV. That's right.
The only interactive property search portal for televisions.
That is right.
Is this.
Keyboom. So if you want to learn more about Keyboom, oh, and by the way, you get all kinds of awesome marketing materials. And oh, by the way, it's only $29 a month. Stop it.
Yep.
You've got to be kidding me.
Check it out.
Click the Keyboom banner you see right here. Over on your right, you might have to scroll down a little bit. There might be a link up above on Facebook, but you got to check it out. With that, you guys have a great day. Do us a favor, leave us your comments. Feedback Fridays tomorrow.
Yes, if you want a cone.
Yeah, if you want a road cone or maybe some of the other great prizes that we've been showing you this week, leave your comments. Do us a favor, forward, share, and subscribe. We'll catch you later here at the National Real Estate Post.
We haven't even started showing them the triple X or really offensive stuff we have in here yet. Bye.
We won't do that.
See ya.